Good afternoon and good morning. Welcome to this panel about the future of money. My name is Szalay and I'm Currencies Correspondent for the Financial Times based in London. First of all, I would like to ask our panelists to briefly introduce themselves. And one quick question: is the future of money public money backed by a central bank or private money backed by someone else? Johannes, could we start with you, please?
Okay. Johannes Duong is my name, and I'm working for the Austrian National Bank. At the beginning, I was in the risk department, and then I switched to the treasury department in the back office for collateral management, cash management, and in the recent years also for the fintech topics, especially digital assets and central bank digital currency. And in the last year, we started our project Delphi. So we tokenized a government bond and created a wholesale CBDC just for simulation. It's a research project, and together with some banks and Austrian treasury together. But this is only a research project for gaining experiences and also sharing the experiences with the ECB and other national banks. So thank you.
Thank you. Is, in your view, the future of money, is it public or private?
So it's a good question. So I personally think it could be a coexistence. I think so. It's hard to say it only private or public, and I think we're looking at the market at the moment. So the crypto markets and so on. I think it's hard to say that they will disappear. I don't think so, personally. So also the national banks are working on that worldwide on CBDC. So I personally think there could be a coexistence.
Thank you very much. Simon.
Hi, thank you, Eva. Simon Chantry here. I'm co-founder and chief information officer at Bitt. Bitt is one of the older blockchain firms in the space. We currently have 2 CBDC deployments and multiple stablecoin deployments across 3 continents. We have a full digital currency management system that serves central banks and financial institutions that are looking to either issue CBDCs or stablecoins or integrate with CBDCs and stablecoins. I think my view is similar to Johannes's in that I think there will be a coexistence of private and public money. I think what we're seeing play out now is competition driven largely by the technological innovation of cryptocurrency over the last decade or so. This technology has made sort of transaction and settlement more efficient and arguably more secure, also more accessible depending on how the networks are configured and deployed. And so that's what I'm most excited about, is to get digital currency systems live that are more easily accessible, that have augmented feature sets compared to what's currently out there in the traditional system, and that enable just more powerful financial services for more people. But I do think it's going to span public, private, and then this new form of decentralized, which you could argue is a form of private money, but it's I would say it's arguably a new thing. That's my 2 cents to kick it off.
Thank you very much. We'll come back to some of those points. Alan, if we could come to you next, please.
Sure. Thanks for having us here for this panel. So my name is Alan. So head up the Fintech Infrastructure Office at the Monetary Authority of Singapore. In this capacity, really look after, I guess, strategies and initiatives that we are looking to drive in terms of technology innovation for the financial sector. More recently, looking at new and emerging technologies and new models such as CBDCs, digital assets, DeFi, etc. On your question on the future of money, I would just draw the reference to money as it is today, right? We keep money, I guess, in 2 forms today, which is the physical note coins, as well as deposits held with commercial banks. So from our perspective, at least, really looking at, I guess, different forms of money as it comes up. I think that's continuous evolution and improvements in various forms of money. So we continue to keep a close watch as that evolves over time.
Thank you. Alan, just before we move on, I wanted to ask you, in terms of who's backing the money in the future, central banks or a private entity or entities, what's your money on?
Right. I don't think we can necessarily put a finger on one versus the other, however, and I don't know whether the choice is really binary, that you would choose one versus the other. If we take reference on where we are today and moving forward, I guess there's I guess an interest, I guess, in central bank liability, and also the value that private money actually provides, depending on, I guess, the use cases. So that synergy potentially would exist moving forward. But again, I think what we are studying, at least from our perspective, is understand the different technologies, the different options. And I think all these are ultimately going to be decided by various factors. So long story short, I think the future is open. And I think there are a few choices that are out there at the moment. Thank
you very much. And Makoto, can we come to you, please?
Yeah, I'm Makoto Takemiya. I'm the co-founder and group CEO of Soramitsu. We're a technology company specializing in blockchain space that we've almost been around for 6 years now. So it's been quite a long journey. I personally am a computer scientist by training and background, and I got into blockchain back in 2013. Really, it was Bitcoin at the beginning, just like everyone else. But from there, I've kind of evolved in my thinking quite a lot, and my company has had some experience working with central banks as well, including the Central Bank of Cambodia on the Bakong project. And we also contribute to many open source projects, one of them being Sora, which is really a fascinating decentralized economic system. And to answer your question about public versus private, I do think the classification is a little bit, maybe public and private are not the best terms, because some central banks are private firms, but I think really fiat versus or maybe a debt-based money versus some kind of other type of money, like maybe collateral-backed stablecoin or something like that, is maybe a more interesting distinction. And to be honest, I don't think anyone can really predict what the future will be. I do think that there are interesting trends, and I think as some countries kind of de-dollarize or potentially accept other currencies in addition to the dollar, El Salvador, being one of them, I think we're going to see some really interesting kind of currency zones where some areas will use maybe one type of money that's maybe backed by collateral that is meaningful in the local area, and others who have a stronger government or stronger political influence, like the EU or the US, may continue to use a fiat currency, created and maintained by central banks. So I think it's really going to depend a lot on the local geographies. But I do think kind of politically weaker countries, like maybe in developing world, they have a potential to kind of use new ideas and new technology, and I think they, at least some of them, are going to experiment with these.
That's very interesting. Thank you. So before we move really into the future, I am curious to just spend a bit of time looking at the past, because, the question, and I appreciate it might be a little bit awkwardly phrased, but public versus private money. Correct me if I'm wrong, but private money as a concept wasn't around so much. 2 years ago, I'm not sure we would have talked about that. So can you guys maybe share your thoughts with me on how we got here? Why are we suddenly talking about, central bank digital currencies? And why are we having this conversation of, privately backed, whether it's by a technology company, stable coins and money, or versus central bank backed money? Would anyone like to kick us off?
I'm happy to start, but Alan, I think you probably have some interesting.
Yeah.
Sure. So the history of currency is a history of private currency, of course, and so when you look at the evolution of money, this is sort of where it came from, promissory notes and these sorts of things coming from private institutions. But I think the reemergence over the last few years, and certainly with the growth of stablecoins, it's made it even slightly more complex, is just the emergence of Bitcoin onto sort of the international financial scene as a sort of a decentralized alternative to transaction and value storage, I guess is sort of the simplest way to put it. Which are, I guess, some of the considered properties of money. So to bring it back to a public sort of this new definition of private money, where new structures are coming to market to offer it, I think it perhaps calls into question monetary policy and the fact that more people are learning about monetary policy and trying to wrap their head around what is good for transaction technology and savings technology and settlement, and are there different tools that should be used in different settings. I do think that technology has has played a large role in forcing this discussion. Certainly when you have a brand new asset class that amasses trillions of dollars in market cap, there are going to be new discussions, and there's going to be people from different perspectives analyzing it and trying to understand how it came about. Why is it registering as valuable in a growing number of people worldwide? And then, of course, how can the traditional structures that administer monetary systems, how can they take advantage of that technology and compete? It is down to sort of what I mentioned in my initial answer. I think it's healthy competition that's going on that's been largely driven by technology. But I'm curious to hear what the other panelists think as well.
Adam, maybe we could come to you.
Yeah, I think just to kind of echo what Simon has mentioned, I think the notion of private money is not new, but perhaps what is being, I guess, looked at, I guess, more closely is the monetary structure, the kind of the two-tier monetary structure in which commercial banks create money as well as central banks kind of playing the role of preserving its value. I think that's being looked at, and to a certain extent, with the rise of blockchain, I think that has, I guess, exposed or piqued the interest, I guess, in a wider group of the wider population, in fact, among technologists, just to understand the kind of monetary policy and the kind of thinking behind it. And I think that's perhaps what is new, less of the construct of private money versus public money. And I think the other element there is just different forms of money. I think that's something that I would say that's new.
Thank you. Guys, do you want to add something? Or
yeah, I'll say a couple things. Sorry, maybe I'll quickly add a comment, and then Johannes can make a comment as well. But as a computer scientist, I noticed that in my computer science department when I studied at the university in California, there are many libertarians there, and I'm also a very libertarian type of person. And so computer scientists don't really like, many people think we're smarter than, as computer scientists, we're smarter than non-technologists. And so people like to think of ideal systems and creating theoretically ideal systems, and computer science lets you do that. And Bitcoin in many ways was a protest against what Satoshi kind of saw as ineffective or ineffectual monetary policy back in the 2008 crisis. And, as kind of shown in his Genesis block hash that, that referenced the Times article. But I think really the rise of kind of computer scientists and kind of this kind of data-driven type of thought processes means that we don't really have to wait for central banks or other types of large entities to catch up. A few people sitting down writing some code and creating a theoretically interesting system can do this in a matter of a few months. And I think that's why we're seeing a lot of these experiments happening. Some of them are have better results than others, but it is a really fast-moving space just because the individual programmer is more empowered now, I would say, than the typical banker is in today's world. Just my thoughts as a technologist.
Thank you. Johannes, can we come to you, please?
Thank you. Thank you to all the panelists, because you point out most important points. I think from our side, it's also important to look at the wholesaling side, so the industry side payments. As you point out that the retail payment for private consumers, it's important, definitely. But for us, especially our department, we are looking at the settlement cycle of financial instruments and so on. And we see so many projects at the moment coming up, like Project Ubin from Mars, Project Jasper from Bank of Canada, Lion Rock from Hong Kong, our Project Delphi, Helvetia from Switzerland, and Blockbuster from Germany. So many national banks, they are simulating their wholesaling side for industry or for financial market. I think this is also important to look at, that they are still rising up in the industry for 4.0, for example, for automatization payment. I think this is also something important to look at, that this is coming more and more and in a stronger move at the moment, what I personally see in the market.
Thank you all for that. I guess the reason why I'm asking is because central bank digital currencies, people who are not necessarily very into technology or monetary policy, just people who use money, often struggle with understanding what it is. What is the difference between a central bank digital currency, and what is the difference between, my money that's electronically sitting somewhere and who knows what's happening to it. So I'm just going to throw this out there and see what you guys have to say. Is our CBDC a way of central banks to retain control of the monetary system?
Maybe I'll start. I think that if you look at the, as Johannes has mentioned, I think there's much research that's going on to this space, whether it's the retail side of things or on the wholesale side of things. I think it's important to kind of step back, and these are probably two, you can look at it differently, the retail CBDC construct and also the wholesale CBDC side of things. And if you kind of take a step back, I understand, I guess, the motivation why this, I guess, interest in CBDC has occurred. I think on the wholesale side, it's a lot of it is driven to, I guess, the interest in driving efficiency in the existing financial infrastructure, through the experience that we have with Project Ubin and other efforts over the last more than 5 years, really looking at how we can make the existing interbank payment system and potentially extending that to a cross-border setting more efficient and potentially cheaper. But if you take a look at the retail CBDC side of things, I think there are, I guess, certain drivers, and this could vary across jurisdictions. Some of these drivers could be driven through the notion that as more transactions, I guess, occur electronically, as commerce happens digitally, the question then is, with the existing construct that we have in terms of physical cash, whereby it's a central bank liability, in such a kind of environment, how might there be a need to preserve the central bank liability, but in a digital form? So that's kind of one driver there. The other set of drivers, I think it's also the push towards, I guess, digital services that are provided through various tech platforms. How might that be combined with the ability to, I guess, transfer value and exchange value, just as you would exchange information? So there's certainly a push in that direction in terms of digital innovation, financial, I would say, efficiency. And the last piece is around efforts to drive financial inclusion. So I think these are some of the kind of drivers that would lead to why central banks are looking at CBDCs, some of which, at least, I'm sure there are others, but at least from my perspective, these are some of the areas that we have seen, and based on the recent global CBDC challenge that we had the opportunity to organize with some other international organizations, I think those are some of the key trends that have come up. And I think it's important to look at the efforts, the innovations, the experiments, and the research that's happening in the space from that lens. Understand what's the drivers, understand the motivation. And I think Makoto did mention it, looking at it from different jurisdictions, and understand and infer and extract maybe the broader lessons and the kind of context that we see for each party that's involved.
Can I just ask why now? Is there any concern around big tech and technology companies having more control?
I think this is something that is at least from our perspective, technology trends, payment innovation. That's something that we look at, continue to look at, and it's not tied to digital currency necessarily. Things like open APIs, things like how do we enable more efficient account-to-account transfers. That is something that we've been looking at. I think perhaps what has driven the imaginations from a digital currency perspective is the popularization of blockchain and distributed ledger technology, and combining some of these efforts as well as some of the innovations that's happening in the private sector. I think that's driven some of the interest in central bank digital currency.
Thank you so much. Simon, do you have any thoughts to add on this particular point?
Yeah, I guess to say that extending central bank money sort of further throughout the financial system and economy certainly has some potential benefits and also some potential risks. And these are being sort of fleshed out and experimented with and researched, and they have been researched for a number of years now. And so, we're really excited to be on the forefront of that and determining that. And even though our focus is from a technology perspective, we are keenly aware of some of the potential impacts and take them very seriously. That it's not. I guess one of the mandates of a central bank is to ensure financial stability, and so we want to ensure that has that's sort of maintained. And this is where you can sort of capitalize on some of the elements of programmable currency, programmable money. I guess one of the points I wanted to make was that when you look at when we think about some of the more idealistic goals, it is really about interoperability, not just across currency networks, but also in other asset classes as well. And so you can think about the efforts of real-time payment networks and the drive towards ISO 20022 as a sort of global standard. These efforts were already underway. And I think what some of the sort of blockchain distributed ledger technology advocates might offer is that this might be an ideal technology, not just for financial network integration and interoperability, but also for other asset classes, so that you can achieve some of the delivery versus payment objectives, in addition to the payment versus payment objectives that again ISO 20022 is trying to facilitate, I guess. So yeah, just those are a few more comments on the topic.
Thank you. Before we come to you, Johannes, just staying with you, Simon, for a moment. As a technology company, I guess you guys see quite a lot of projects and different approaches. Are there any particular, you mentioned risks, are there any particular risks that you think need to be held very much in the front of the mind?
Yeah, look, I think one of the bigger risks is that this is the first time that central banks are offering a product in market outside of cash, like physical notes and coins, that extends that has the potential rather to extend to larger numbers of people, both in country and abroad. And so this is they're very, very large projects that house more than just technology concerns and considerations. They span change management, organizational management, go-to-market, of course, security, operational, governance. So these are massive considerations to be undertaken by a central bank. And in a lot of cases, it's the first time that they have been so intimately involved in a technology rollout that touches just an increased number of stakeholders. So I would say it's the risk. I know that that's not really a specific answer. It's a broader answer to say there's a lot of unknowns, and it's an augmentation of central bank responsibilities. So I would say that brings up a number of risks, just due to the nature.
For example.
Yeah, absolutely. That's a huge one. Yeah. Access to data, who's watching the watchers, auditability of, whoever has privileged access to data. So it spans many different categories, and each of those categories have risks of their own.
Thank you. Johannes, I would like to come to you and ask you about, your experiences that you saw during your project, but also to sort of link back to the question Alan and Simon answered. Are you guys competing with big tech now in the business of money and technology?
So we are not, also from our perspective, we are here to learn, and the technology is a huge development for us. It is important to gain access to the know-how to work with the new technology instead to stop it. I think it's better to learn with that and to make the best of it. So, and gaining the experiences. So this is from our point of view, and we are also open for new technologies. And so for us, as I said, the experiences is the most important. How the future would look like, so it will depend. I think we have not a magic crystal glass for looking how the future will look like. But for us, we see that most important thing is gaining the know-how, gaining the experiences from the practical point of view, and then how to work with the new technology.
Thank you. You mentioned that you guys have done a trial already. Are there any findings you could share with us on whether CBDCs are
definitely, because for us, of course, with a wholesale CBDC for settlement, for tokenized financial instruments, that's working technologically. I think all the central banks working with that, they have already set up such a prototyping phase. But for us, it is important is looking at the law. At least in Austria, we have all our own law and so on. How does the jurisdictions look like to meet the decentralized technology in financial market? Because many countries, I think also in Austria, that our jurisdiction is more concentrating on a centralized technology. When you use the decentralized technology, does it meet the jurisdictions? So this is very important for us. That's why we have also a legal stream in our project, a technical stream and a legal stream. In the legal streams, we have our experts in law and so on, and they're looking at how does it adapt with the Austrian law. Okay, so this is very important because technologically, I think it's working. So that I don't think that, especially the scalability is a question, because when you have mass transactions, maybe the DLT has a problem. But when sending a token from A to B and he's sending back in DVP with wholesale CBDC or stablecoin, whatever, it's working technologically. Either public or private blockchain, both will cover it. But the legal side is very important to look at it. And that's why for us, it's also our focus on the jurisdictions.
Great, thank you so much. Makoto, could you do you have any thoughts to share with us on CBDCs, what they are and whether they're competing, an attempt to compete with private initiatives?
Yeah, well, my experience is mainly with central banks in developing countries, and they don't really seem to care too much about thinking that they're competing with maybe cryptocurrency or stablecoin. They're more competing with larger currencies like the US dollar, for instance, and monetary policy being hurt from over dollarization, for example. So these are really real problems. I do think that things like Bitcoin or even projects like Sora that we contribute to, which is trying to actually create a decentralized or supranational economic system that countries could actually use in a public blockchain context. Projects like this are not really so much a threat to central banks, but in developing countries, but it's more of like, it shows the cracks in dollarization. So El Salvador is a great example. Tonga now is talking about using Bitcoin, and who knows who will be next. But I think most central banks that we talk to, it's not a concern to compete with cryptocurrencies. It's really just about applying latest technology to solve the needs of their constituents. So, for example, in Cambodia, the central bank just looked at the landscape and they made a very simple calculation. They saw that maybe only around 20% of people have full access to banking services, but around 70% of people have smartphones. So, it's a simple, calculus to figure out that, you can give people access to the same types of services using their mobile phone that they would traditionally get from a bank, but you don't have to go through all the same type of account structure, which has lots of baggage associated with it due to regulations or processes or software or reporting requirements or all kinds of things. You can kind of create a new system that runs in parallel as a blank slate, and then you can have new types of regulations that you have. So Cambodia, I think, was really a great example of just applying technology in a very practical way. Other countries that we've talked to, they have other types of needs. So for example, in larger countries like Johannes is in, or even Singapore, they don't really have a lot of needs that are not met by existing payment providers. And that's probably why it makes more sense for them to look at things in the wholesale space, just because the retail space probably doesn't have a lot of pain points for the end user. Maybe in the international remittances, there's some pain points, and that's really where cryptocurrencies could potentially come in, especially things like stablecoins or where algorithmic stablecoins can kind of come in and fill this gap. But I think that's like a really narrow market overall, and I think that regular central banks are just going to continue to do monetary policy as they've done along the way, but now they have a little bit extra kind of currency zone competition that maybe was not a factor 10 or 20 years ago.
Thank you. We have a question from the audience, but just one more side question to you, Makoto. You mentioned de-dollarization, but ultimately stablecoins, whether they are algorithmic or otherwise, have to be backed by something, and that is most often currently some sort of a hard currency, and often the dollar. So is this really a de-dollarization, or is just a more sort of convoluted way of using the dollar?
Yeah, so you have to think about what index you want to peg your economy to, right? And if you peg it to the dollar, then you get the advantage of monetary policy from the US, but you're also at the mercy of their monetary policy too. One idea that I really like is pegging to like an index, like a basket of goods. So for example, Chilean central bank maintains the UF, or Unidad de Fomento, which is a cost of living basket of goods that's updated. They update the full weights monthly, but I think there's a daily weight update as well. And if you were to actually look at the exact or the actual purchasing power and try to peg currency to that, that's quite interesting. And that's an experiment that I want to do someday. I haven't gotten around to it yet, but it would be really fun to make a stable coin that would be pegged, for example, to the UF, just because it could potentially meet a lot of human needs, and especially, well, so I run a software company. We pay a lot of our employees pegged to dollars. Contracts, salaries are pegged to $1 per hour or whatever, $1 per month. And, our costs have gone up quite a lot in the past year, just because the dollar has, in fact, lost quite a significant amount of purchasing power in real terms. So the producer price index in Germany, for instance, is much higher. They're not on the dollar, but they're in the euro, but still the dollar kind of affects everyone. And I think, I think that pegging a currency for a transactional currency to a basket of goods that has a fixed purchasing power is something better. But just one final note, this idea actually goes back to Irving Fisher. Back in 1911 to 1913, he wrote a series of papers talking about a compensated dollar, as he called it. And the dollar was on the gold standard back then, but his idea was, the amount of gold is being mined every year. It's fluctuating, so the purchasing power of gold is actually fluctuating a lot. And his idea was, let's just take a basket of goods and then change the amount of gold backing the dollar so it meets this basket of, so fixed purchasing power. And it was never implemented by the Fed, just because it's too hard to do these gold-backed market operations. They didn't have computers back then and internet and all these things. But in today's type of economy, you could actually a country could actually do that if it made sense. And I think countries that have failing currencies right now, I won't mention them, but there's a few countries that have significant inflation right now in the developing world, or even not so developed world. But they should probably be rethinking their entire monetary system, thinking about, what are some different ideas that we can use, because it's not working out so well. So these are just my thoughts, but it's going to be an interesting experiment over the coming years to see where things kind of consolidate to.
Thank you so much. We have time for one audience question, but barely. So let's try it. How do you see the most viable to introduce CBDCs into the population without interrupting the financial freedom of citizens? It's a very interesting question. Johannes, would you like to give it a go?
So it's a good question, because at the moment there is regarding the digital euro or by the ECB, there is a 2 years analyzing phase. I think one main point is regarding to the official press release is the data privacy. So how to protect the data, the privacy. I think there was also last year a public consultation regarding the digital euro, and one of the big points or many questions from the public was data privacy, and I think they'll look at it. Definitely is a big point in the analyze phase.
Alan, do you have any thoughts on how it might be, what might be the best way of doing it?
Yeah, I think one thing that as you were asking the previous question, and I was reflecting, I think one of the key success factors in how we have approached new technologies and also Ubin in the past is the collaboration with the commercial banks, with the tech firms, and that has been the main feature in, I guess, the experimentations that we've done with Ubin and others. So I think that's important to highlight. So it's not necessarily competition, but I think cooperation is very key. And I think in terms of introduction, I think that's something, at least from our perspective, we are looking at it. First of all, with the paper that we have done to just understand the economic merits and implications of CBDC, I think it's important to understand, to go through that process. So we've done that. So the case for CBDC, at least in Singapore, is not urgent. The other thing is, of course, do the technology exploration, which we have undertaken on the first phase with the Global CBDC Challenge and other efforts. So I think in terms of introducing, I guess, to the population, I think it's important to understand and establish a case for where it might be serving a particular need. And I think some of the key answers, or rather key questions, need to be answered. And it probably differs from different jurisdictions. Elements of privacy, elements of decentralization versus accountability, interoperability with existing systems. I think those needs to be established. Where a digital currency would add value, for example, above existing electronic payment systems. I think those need to be studied, how it incorporates, and whether it's going to be cheaper, faster, and ultimately a better user experience for the users. I think those are elements that needs to be considered before somebody really embarks on a retail CBDC effort.
Thank you. Simon, do you have any thoughts on this? The financial freedom, the privacy issue?
Yeah, I think it's a time for standards development and sort of international collaboration. We have increasingly seen more activity out of the US from American politicians and whatnot. I've been speaking with a number of them and their sort of staff or offices regarding privacy considerations, data protection considerations, auditability. And so I think, we've been discussing sort of what are the most appropriate standards bodies to do that deep dive and really try and determine, which stakeholders should have access to what data and what are the accountability measures in place for that. So I think, I think standards and open discussion about access to what could be a massive honeypot of financial data, both for domestic citizens and any others who interact with that currency. It's a big risk, and I think we need more light shine upon it.
Yes, and maybe central bankers will turn into not just financial stability overseers, but also technologists and also safeguarders of data and who knows what else. And it sounds like quite a lot to do. We are out of time. I would just like to ask everyone for a one-word answer. Is CBDC the future of money? Johannes?
Is the CBDC a future of money? Oh, this is,
Yes or no?
a good question. it's hard to say. It depends. From the wholesaling side, I would say from the wholesaling side is easier for me because I'm working on that on a researching project. From the wholesaling side, it could be have a potential, but there are also another technologies that also can address the problems of system breaks, like a central database hosting by a supra organization. Then it's much more faster than a DLT. And from the retail side, I think.
Sorry,
from the retail,
I have to. We have to wrap up. So I'm just going to go with a maybe from you, if that's okay.
Okay, thank you.
Simon, can we come to you?
I'll play by your rules, Eva. Partially.
Okay, Makoto.
Perhaps.
Alan.
Maybe.
And on that insightful conclusion, I'm afraid we have to wrap up, but hopefully it was useful. Thank you so much for your attention, and I guess we'll see.